You have $100 and you want to get into crypto. What on earth should you do? It's a question I get asked all the time, and I'm going to answer it hopefully in the next few minutes to help you get on your crypto journey. My name's Ben. I'm the CEO of Collective Shift, a crypto advice and research platform. And today I'm just going to walk you through what I would do if I had $100. Now, everyone's circumstances are different, and I want to make it clear that someone with only $100 in their bank versus someone that's got say a few $1,000s and they want to invest $100 is two completely different scenarios. If you only have $100 in your bank and that $100 you need to spend on food and shelter and water and those sorts of things, I 100% recommend do not buy crypto. You should only invest what you're willing to lose before putting that money into crypto. Now, there's a couple of options. One, you can go ahead with that and put this money into crypto, or you could just put it back in your bank and start to save that money. I'm personally looking to save for a house, and we've been discussing around where should we put that money that we earn from our income to save for a house. Now, every day that your money is sitting in a bank account in Australian dollars, US dollars, whatever dollars they are, the purchasing power of those dollars depreciates. Now, what on earth does that mean? Let's go back 10 years. How much did a house cost 10 years ago? Let's say on average, $200,000. Here in Melbourne, the average price for a house is well over $1 million. And wages, the amount of money that you earn from your job, doesn't tend to increase too much. And that's because of inflation. And inflation is basically the increase of asset prices, or any price of, groceries, goods, whatever, over a period of time. And the reason inflation occurs is because of the amount of money that's put into, at a very simple level, the amount of money that is put into the economy. Now, how does that even happen? Well, basically what the government does is they go to the in their budgets, and whenever they have a problem, let's say like COVID, they need to boost the economy, they decide that they need more money and we need to push more money in the economy. So they go across to their money printer over in the corner and they press the print button and they just print money out of thin air like that. And all that money, unfortunately, go into the hands of the wealthy, into the stock market, into property prices. So what happens is all that money that comes into circulation increases the prices of assets. And then people that aren't invested into those things, like houses, property, crypto, get left holding the bag. And people with cash, you still have the $100 in their bank account, but now they can't buy a house, or they can't buy as much as they would have 10 years ago because of inflation. And that's the number one reason why I think if you have $100 that you're willing to lose, I'd be putting that into crypto. Now, why do we say you'd be willing to lose? Well, crypto is still very risky. It's very volatile. It's a new asset class, and there's never such thing as a guaranteed investment. However, the thing that's guaranteed for me is putting this in the bank over time is going to lose the purchasing power by just holding it in the bank. And I'm not earning any interest whatsoever or anything worthwhile. So what I would do with $100 before I invest is I'd sign up to collectiveshift.io. Now, I know I'm the CEO and I'm a little bit biased, but without spending any money at all, you can sign up to a 14-day free trial. And that 14-day free trial will give you access to a onboarding call. So if you go to collectiveshift.io, you can basically sign up for our membership. Now, our membership provides a range of different things: education, research, analysis. Really, our platform is there to help you invest and make money in crypto without spending the time that you would need to do on your own. And you can sign up for a 14-day free trial without spending any money. As you get inside the platform, what you get access to is a one-on-one onboarding call with our head of member success, Shane. And what Shane will do is he'll ask you, what are your goals in crypto? What are you trying to do? And you're going to go, I want to invest $100. What should I do? He's going to set up a personal plan for you. But in a nutshell, the thing that we recommend always to everyone starting in crypto is that you start with education. And I always recommend that with people. So you can sign up and you can do our beginner's course. And you can zip through this in a couple of hours. And it really runs through all the ins and outs of crypto, investing, building your portfolio, storing it, how to buy, how to sell, all the basics. Because if you have a basic level of education and knowledge, then you can ride out the waves of volatility. So crypto is one of the most volatile asset classes in the world. And that's because it's so early and it's so young and it's so new. And time again, actually more than 4 times, Bitcoin's gone down more than 50%. So that's like putting your $100 in and having like $45 within 3 days. Now, if you're new to crypto and you've got no idea what you're doing, you're going to basically shit yourself. and I did that when I first started, because I'd be like, holy hell, what's going on here? So it's important that you learn about why it does that, and you can do that through the course. I'll be learning about what Bitcoin is and why it's valuable, and the things I just spoke about inflation of prices. Bitcoin specifically is deflationary, and that's why I put my dollars in Bitcoin, because it's going to balance out and grow over time due to the deflationary nature. Now, these are big terms and big, sort of big terminology, but in terms of what the government does when they can go over to the printer and print more money, you can't print more Bitcoin. There's only ever going to be 21 million Bitcoin ever made. And once they're bought and no one wants to sell them, there's no more to ever get. And if more people want Bitcoin, but there's becoming less and less available, well, basic supply and demand equals that Bitcoin's going to go up. And that, in a nutshell, in a very simple level, is why I buy Bitcoin, because it's going to basically hedge me against the inflation of asset prices. So one day, hopefully, I can buy a house. And we lay all of that out inside our membership. From there, you'll probably want to learn about where to buy it. So there's a range of different exchanges and places where you can buy Bitcoin depending on where you are. If you're in Australia, I recommend CoinSpot. There's also awesome other exchanges, CoinJar, SwiftX. There's a range of other awesome exchanges which you can use, which I recommend, and we've got resources for most of them. If you're in the US, you can use Coinbase, or you can use Kraken. There's a bunch of awesome exchanges. And then I can go in and sign up and create an account. And you load your $100 up. And from there, again, there's a few more resources to check out. But from there, I'll be checking out, within your 14 days, if you haven't spent any money, our investment section. So what we do is we actually invest into crypto ourselves in two different portfolios. One is a long-term growth portfolio where we're trying to beat Bitcoin over a 4-year period. And the other one is our early stage crypto opportunities. And the early stage crypto opportunities are higher risk, higher reward investments where you're basically investing a much smaller percentage. We recommend like 1% of your portfolio. So in this circumstance, you'd be investing $1 into one of the early stage crypto opportunities, because the likelihood of them going down and going to zero is quite likely, just like a startup. However, the upside potential is a lot more, there's a lot more reward basically if that asset goes up compared to something like Bitcoin. So what I'd be doing is I'd probably be investing $75 to $80, $85 in the long-term growth portfolio. And then I'd be looking at a few of our early stage crypto opportunities to park, $1 or $2 or $3 in to start out with. And that way you're going to have a nice distributed portfolio of longer term holding assets as well as some shorter term riskier assets. And then I'll be heading to our content feed and I'll be looking at some of the investments our team is making, specifically in the NFT space. So we do content daily on some of the investments we're making. For example, Matt posted last week around a couple of NFTs that he invested into, and one within 2 or 3 days is already up. I think it's up 300%, which is phenomenal. So I'd be investing into education, I'd be investing into longer term holds, and I'll be investing a smaller percentage into some of the more risky assets and spreading it across. Again, never invest more than you're willing to lose. If you don't have $100, only invest what you're willing to lose, and that way you're not going to be put in a sticky situation when crypto eventually goes down for a period of time and you don't need to sell, because that is when you should be, investing more, or that's where the opportunities really lie when market goes down, not selling and panicking. So I'd start out with that. So free trial, education, long-term holds, and some early stage riskier assets. That's where I'll be parking my money if I had $100 to buy crypto, not in my bank. Again, I'm not a financial advisor. It's completely up to you how you want to do things, but I hope that's been helpful. Sign up to collectiveshift.io for a 14-day free trial, and I hope to see you in the platform. Thanks, guys. Bye for now.